Hello, welcome to April 26th. The Alphas have one more win. KR exit at 36%. That's 21 wins from year to date. Here we are. KR exited at 790. This got in at 580. And it gave us a $210 profit with, let me go get rid of these. There we go. $210 profit minus $2 in fees, 208 on the trade, 2142 was the owed, and now we have a new O of 1934. So there we are. We have KR. Now, also noted, I haven't run the scanner yet, but a very good suspicion that this is going to qualify for a put. Correct. Why? Remember stochastic strategies, a quick review. STO is going down. RSI going down. Histogram going down. All three conditions are now met. The only thing left now is to determine if one is the AB spread in the options chain too big. And that will be in the evaluation, because we now have a $2,000 to 76 for the buying power. So now we have to go and run our scanner for stochastic scanner and see if there's anything available to get into the trade. Also note that the stochastic scanner has 2 evolutions already since we began, so it might be a limited list, and all the conditions must be met for the new pickup. With that said, we'll now go on to our new leader for the Alphas, and that's AT&T. So here we are for AT&T with a and it, oh, look at that! It almost closed above the third ratio day. It had a high of 3171, and we are needing a. I believe that I'm going to have to go back in time now to find out where is that third ratio at. So third ratio is at 3444 for 3134. So that's our ratio that we need to get. So let's go ahead and put a marker here so that we have an idea of the level that we're looking for. 31.44 for the third ratio. So now we'll go back and, ooh, that's a new study coming down the line, guys, there. DMI and also implied volatility. Those are new parameters that have been added to the master chart. Sorry about that, a little exposure there. It's like catching someone in the shower and you didn't expect it. Okay, right, so we have a 3144 is our third ratio, and we got a high. We opened at 3148. And if we were able to hold on to that 3148, we would have gone to our dipper low. But I believe we are already we are in dipper low. I completely forgot. We are at less than 60 days. Yes, we are less than 60 days in the option. So we have already gone to dipper low rules. Yes, we have already gone to dipper low rules. So we are looking for right there. We now got this. If we have a higher low on the right tomorrow, then we can we'll move the stop here, because we are in less than 60 days to expiration. Usually our trades are out within the first 30 days, but sometimes things don't work out exactly right and we have to be prepared for it. That is rolling with the punches in trading. So T is already in dipper low trigger because of the less than 60 days to expiration. And that is the lesson there, that the options have time decay. And that time decay, you're seeing it happen right here. You saw it happen. RCL got stopped out today for a loss. Let's jump over to RCL. RCL got stopped out for a loss because we got into a 60 day to expiration, and we went to hyper high, which was right here, and we got stopped out today right there at the opening. So our loss was 539 for one contract, 539 minus $2 in fees, 41 with the old O of 1125. We now have a new O of 1666. So new O will be 1666 when the time comes to retrace this. But the point was that both of these trades, RCL and T, have these 30 less than 60 days to expiration rule trigger, and that is the lower low for the dipper low for the put and the hipper high for the puts, dipper low for the calls to get out of the trade, as we are experiencing now accelerating time decay. Yes, what will happen between now and the end of the 60 days is the value of the option will start losing a lot per day, and it's called the acceleration. So time decay. So we are definitely be looking at the opportunities to see about what we can do. Not to experience. We took a pretty good hit here on RCL, but then again, we got a big win a few days last week on Adobe. So seriously, that's the loss of probability. I mean, I had a win for 170%, and the result was that now it's time. The double the probability was due, but it's a lot better than other major losses that are out there. So now that takes us down to CVS, and CVS is running at its third ratio is up here at 79 79.96. That is our third ratio, and we are just hobbling along here on this one. And this is August. So again, on August expiration, reviewing the 60-day rule. August 15th, June 15th, June 15th, May 15th. Just rule of thumb, the actual option date, we'll have to look at the calendar. Well, actually, the actual option expiration is right here. It's right there. There's CVS, 20 August. So if we're 20 August, 60 days away from 20 August makes us May 20. So it's starting on May 20. If this trade is not completed by May 20, we will then initiate our, this is a call. So we'll be initiating dipper low to look toward getting out of the trade to hold on to and get back our buying capital and hold on to some kind of profit, and then just start the process over again. Okay, so RTX now is in play here. RTX, and now RTX is doing a nice recovery. It's pushing. I mean, it was way down here, and this is also another August expiration. So that August expiration, they're all August 20. So RTX has till May 20th, or it's going to be looking at a dipper low to get out. Same thing for Capri. Capri is also in August, and so is ATVI. So we have 4 August positions, 5 with T minus. We have 5 August positions that will get triggered into the last bar, not last bar, dipper low or hipper high, according to what positions they're in, directions, starting or on and around May 20th. To start looking toward getting out and get that buying power back again. Okay, so now that does take us to ATVI. Oh, well, there's Capri. And there's Capri, and it's just hobbling along, trying to get up. Its third ratio is at 57. Now remember I told you about the 30 days. I mean, this is like usually we in a good position, we're able to get up there, close that third ratio, and get into that dipper lower, dipper high, hipper high condition to exit. Okay, well, that does conclude today's report with the alphas having an extra win at KR at 36% profit, and has 21 days for the trade for year to date. And with that, I thank you very much for stopping by and checking it out.